All right, let's dive in. The way you use money, how you send it, how you save it, even the things you own is about to get a massive overhaul. And no, we're not just talking about a software update. We're talking about potentially rebuilding our financial system from the ground up using a completely new set of digital tools. So let's break down what that actually means. You know, this quote from way back in 2008 from the anonymous creator of Bitcoin, it totally nails the core issue. It points out that our entire system relies on these middlemen, these trusted third parties, and that trust, well, it has weaknesses. This is the exact problem that this whole new wave of financial technology was created to solve.
So that's the billion-dollar question, isn't it? If you could redesign parts of our financial plumbing from scratch, how would you actually do it? What are the new tools for the job? And look, this isn't just some thought experiment anymore. The technologies to do this are here, and they're being rolled out on a huge scale. So let's take a look at the actual building blocks.
Okay, so before we can really get into how your money and your wallet are going to change, we first have to get a handle on the tools that make all of this possible. These are the big ideas, the fundamental concepts that this entire conversation is built on.
All right, first up is this big idea, the digital asset. And you've got to understand, this is a super broad term. For a second, just forget about Bitcoin or crypto. This technology can represent pretty much anything of value. A stock, a bond, a piece of real estate, even a piece of art, all in a secure digital format. The key takeaway here is that this can apply to almost any asset you can possibly imagine.
So how do you actually turn a real-world thing, like a building, into a digital asset? Well, the answer is this process called tokenization. The easiest way to think about it is like creating a digital title or a deed for an asset. By creating this unique digital token that represents ownership, you can suddenly trade that asset, you can split it up, and you can manage it with the same speed and efficiency as sending an email.
And this isn't just some tech wizardry, right? There's an actual process here. It starts with selecting an asset. Let's say it's a big commercial real estate building. Then you do all the legal work to make sure that token is actually backed by real ownership. After that, you issue the token on a blockchain. And finally, you make it available on a platform where people can trade it. It shows you exactly how something physical and clunky can become digital and super easy to transfer.
All right, so we've got the building blocks. Now for the really interesting part. How does this tech actually change the way we use our money day to day? We're going to look at everything from just making a simple payment to what banking itself might look like.
Here is a perfect real-world example. Sending money overseas today, it's a mess, right? It's a total nightmare. It can take days for the money to actually settle. It has to hop between multiple banks, and each one takes a little cut. The World Bank says the average fee is a whopping 6.4%. Now compare that to a payment using a stablecoin. That's a digital asset pegged to something like the US dollar. The settlement is almost instant, the cost is a tiny fraction of what it used to be, and it can go straight from me to you. No middleman required.
And believe me, this isn't some tiny little experiment. The demand is absolutely exploding. The market for these digital dollars has just seen phenomenal growth. It's a really clear signal that people want a more efficient way to move money around, one that works 24/7 just like the internet does.
But you know, this isn't just about blowing up the old system. Even the big traditional banks are looking at how to upgrade their own technology. Think about your normal everyday bank account, the one that's insured and feels safe. Now, what if you could turn that deposit into a token? This tokenized deposit would give you all the safety and familiarity of your bank, but with the added superpowers of a digital asset, like instant settlement and even programmability. And if you want to get a sense of just how huge this could be, check out this number. Some industry reports are estimating that over $600 billion in real-world assets could be tokenized by 2030. We're talking about things that are super illiquid right now, like a piece of a private company or a fraction of an office building, that could suddenly become as easy to trade as a share of stock. The economic impact here could be absolutely massive.
Okay, so a change this massive, this fundamental, it obviously can't happen in the Wild West. You need rules. With all this new technology, you have to ask the crucial question: how should this new digital financial system be regulated so that it's safe, secure, and fair for everyone?
So one of the key arguments in the source material we're looking at is that the way we've been regulating this stuff has been, well, a bit of a problem. It describes a strategy of regulation by enforcement, basically making up the rules by suing people instead of writing clear guidelines up front.
The report claims this approach has created a ton of uncertainty and a hostile environment, which has actually pushed developers and companies to move outside the US.
So what's the fix? Well, the report lays out this 5-point game plan. First, get some clear rules on the books to end the uncertainty. Second, use this new tech to fight crime and protect national security. Third, make sure the US stays a leader in this space. And finally, of course, protect consumers and make sure everyone has fair access.
Basically, the whole idea is to stop the turf wars between agencies and just give everyone their own lane to swim in. So under this proposal, the SEC would handle anything that looks and acts like a security, a tokenized stock. The CFTC gets the stuff that looks like a commodity. And then you have the Treasury and the banking regulators doing what they already do best, fighting illicit finance and supervising the banks. The goal here is just clarity.
Okay, we've covered a lot of ground here. The tech, the impact it could have, the proposed rules of the road. So let's boil it all down. What does this actually mean for you and the future of your wallet?
When you really get down to it, this is a fundamental shift in how we think about value. Think about your financial life right now. You've got your bank app, your brokerage account, your retirement login. They're all in their own little boxes, and they don't really talk to each other very well. The vision here is a move away from that toward a unified network where all kinds of value, your money, your stocks, your property, are represented by tokens that can move instantly and seamlessly, just like information moves on the internet today. And all of this really leads to one final huge question for all of us, because this transformation is going to force some trade-offs. So as our financial world gets rewritten, what do we value most? Is it the incredible speed and low cost of this new technology? Or are we more concerned about the privacy of our transactions? Or, at the end of the day, is the rock-solid security of the traditional system we already know the most important thing? The answer to that is what's really going to define the future of finance.